Namaste, viewers. It's Tuesday morning, March 4, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money's 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Indian equity indices ended marginally lower on March 3 amid high volatility due to mixed cues, including better domestic data points like better GDP data, rising GST collections, but uncertainty over global trade and Ukraine peace deal weighed on the markets. The indices had opened higher, attempting a rebound after the longest monthly losing streak since 1996. A surprise uptick in domestic growth briefly lifted spirits, but persistent global uncertainties quickly erased those gains. Amid positive global cues, the Indian indices opened higher but turned negative in the initial hour and dragged the market lower in the first half itself. However, buying in the second half erased all the intraday losses to end with moderate losses, or nearly flat. At close, the Sensex was down 112 points or 0.15% at 73,085, and the Nifty was down a mere 5 points or 0.02% at 22,119. The Nifty 50 index ended in the negative zone for the ninth consecutive session, while BSE Sensex ended lower for the second consecutive session. 33 out of the 50 constituent stocks of the Nifty 50 settled higher, with the gains led by Bharat Electronics, Grasim, Eicher Motors, JSW Steel, and Ultratech Cement. Coal India, Bajaj Auto, Bajaj Finserv, and HDFC Bank were among the other laggards of Nifty 50 constituents. Among the broader markets, the Nifty Mid Cap 100 index settled higher by 0.14%, while the Nifty Small Cap 100 settled lower by 0.27% on Monday. Meanwhile, the broader small and mid cap indices have tumbled over 20% from their record highs, officially entering bear market territory. Relentless foreign selling has deepened the market downturn, with FIs offloading rupees 58,988 crore worth of Indian equities in February alone. Domestic investors, however, have been a counterforce, purchasing stocks worth rupees 64,853 crores. Sectoral markets ended on a mixed note. Nifty IT, metal, auto, pharma, realty, and healthcare indices settled high. On the other hand, banking, oil and gas, and media indices on the NSE settled lower. Fresh data released on February 28 showed India's economy grew 6.2% in the October December quarter, driven by robust government and consumer spending. However, March typically sees lower investment activity as investors focus on financial year end obligations, further limiting buying interests. Index heavyweights and India's largest company by market capitalization, Reliance Industries, settled lower by 2.17%, dragging down both the indexes. Reliance Industries, the second heaviest stock on the benchmark indices, fell 3% to a 16-month low. Bloomberg reported that Reliance New Energy risks a fine due to delays in settling up a battery cell plant. Shares of Coal India tumbled over 2% as its February business update indicated a decline in production, hurting investor sentiment. Meanwhile, Coffee Day Enterprises surged 20% after the NCLAT Chennai bench dismissed a bankruptcy plea filed by IDBI trusteeship over a rupees 288 crore default. In the US overnight, US stocks crashed after a report on manufacturing shows dips and tariffs proposed by President Trump on Mexico and Canada to go into effect from today, March 4. The S&P 500 fell 1.8% on the day. The technology-heavy Nasdaq Composites led 2.64%, leading declines among the major three indexes. The Dow Jones Industrial Average fell 1.5% or about 650 points. After Monday's decline, the Nasdaq was down about 9% from its record closing high in December last year. Brent crude is $71.56 a barrel. Gold is rupees 85,690 per 10 grams, and silver is rupees 96,100 per kilogram. Now, for today's outlook for the Indian market. Nifty found support around 22,000 and managed to close above the crucial 38.2% Fibonacci retracement level of 22,043, derived from the 2022 low of 15,213 to its all time high of 26,277 last year. The RSI remains in a highly oversold zone on the daily chart, indicating a possible short term rebound towards the 400-day EMA at 22,475. However, the trend remains bearish, favoring a sell on rise approach unless Nifty decisively close about 22,600. Immediate resistance are at 22,300, while key support stands at 22,000. If this support is breached on a closing basis, the next support lies at 21,800. Stocks to watch today: ASK Automotive, RBL Bank, Godrej Properties, IEX, Uno Minda, Intellect Design, SIAT, Exchanging Solutions, UCO Bank, Onyx Solar Energy, REC, New JSR Technologies, Anlord Technology Solutions, Suntech Realty, Wind India, Dr. Agarwal's Eye Hospitals, and Nucleus Office Solutions will be in focus on March 4. That's today. That's it for today, my dear viewers. And if you're enjoying our content, please do subscribe, like, and share this video as much as possible. I will see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it is all about money.